Good afternoon. Thank you for tuning in to the Multifamily Market Update presented by the Multifamily Investment Advisors team here at Keller Williams Commercial. I'm Travis Montgomery, the Director of Marketing for the team. I want to start this off by passing it over to our Director of Capital Analytics, Drew Heisman, just to give us a few updates in his section.
Hello, good afternoon, everyone. Just a brief update on the 10-year this week. There's been trading in a range between about 1.2 on the low end and 1.39 on the higher end. There's been little movement over the last couple of weeks, including this week. It's down 14 basis points from or 4 basis points from its high of 1.29 this week. That's all I had to update for the week. Thank you, Travis.
Thanks for sharing that information, Drew. Now I'm going to pass it over to Vince Ewing to actually give us an update in regards to what investors are actually seeing out there when they're entering the Chicagoland market.
Thanks for passing the ball over here, Travis. Traditionally, as currently as well, we're seeing a market in which over 50% of the population in Chicago are renters. One of the only cities in the top 10 population counts that has that under their belt. So we're seeing a lot of investors from the coastal regions getting into Chicago because of the strong rental aspects that it has in comparison to New York and LA. The average sale price for a property in LA is currently going for $500,000. The average sale price for a property in New York is currently going for just about $1 million. In Chicago, we're sitting just above $300,000. So we're seeing a lot more meat on the bone in comparison to other metro areas with similar population counts. 36 Fortune 500 companies are hosting their headquarters in Chicago's MSE. Very strong rental and competitive rental market for tenants as well, with the average tenant paying under 20% of their income for rent. That leaves room for growth here in order to, maybe add some value and raise rents for investors. And we're seeing them rush in. We're getting a few phone calls on listings that we currently have, and even the ones we have under contract actually had multiple bids. So that's a waiting list that we're wanting to service with our new opportunities. So, and that's all I have for my update here today.
Thanks, Vince, for sharing that. Definitely seeing a lot of strong interest in the Chicago market, as well as from those New York, New Jersey, California investors as well. Another thing that's driving the market is the recent surge in upcoming developments in the Chicagoland area. So I want to pass it over to Jason York just to provide us with some updates in regards to some upcoming developments.
Absolutely. Thanks, Travis. And good afternoon, everyone. I'm going to switch it up a little bit. No specific development project to highlight this week, Travis, but I would like to share some research that we have been tracking. Over the past few months, we've been seeing a decline in lumber prices. And as of last week, we were seeing prices as low as $400 per 1,000 board feet, which is pretty significant, and it shows us a couple things. Number one, it shows us we're getting back to a price point that we were seeing in 2018 and the years prior. And then also it does show us that if we look back to May of 2021, lumber was at an all-time high of about $1,500 per 1,000 board feet. And we've seen a decline, and now it's back down to about $400. So it's almost 74% decline. And I know a lot of developers will be happy about that. And it's something we should keep our eye on moving forward, as well as other building and construction materials as well. Thanks, Trav.
Thanks, Jason, for sharing that. That's definitely some great information when it comes to the price of lumber. As you mentioned, it was rising increasingly during the pandemic, but it's good to see that is starting to trickle backwards and get to normal prices. Just wanted to pass the ball over to Kelly Rich now to share a few investment opportunities that the multifamily investors advisors have to offer.
Sure. Thanks, Trav. I do have a couple of investments that I want to highlight. The first one is located in downtown Hyde Park. The address is 5228 South Blackstone. This is a rare opportunity to acquire a trophy wealth preservation asset in Hyde Park. It's right along the 53rd Street corridor. It's a 40-unit mixed-use building. It benefits from Hyde Park's high residential renter demand and high office retail demand that we're seeing currently. The 40 units consist of 24 residential, condo quality units, and 16 retail office spaces with a long-term national anchor tenant in Boston market. This property went through a recent renovation this year to include individually metered utilities, in-unit washer dryers, and more. We are offering this asset as requests for offers, so definitely reach out to us for more information about that. Next, I want to talk about something in the 100 unit count range. We have an opportunity to pick up a 114 unit Southside portfolio in Brainerd and the Chatham neighborhoods with a low per unit price of less than $60,000 per unit. These combined portfolios offer an opportunity to pick up a critical mass of assets within a few miles of each other with great cash flow from day one. So for more information on these or any other opportunities that we have available, you can reach out to us at www.chicagomultifamilyinvestments.com, by email at investment@kwcommercial.com, and by phone 312-863-8990. I am going to post the contact information in the chat for everyone.
Thanks for doing that, Kelly. And just before we conclude, want to go over a great event that's actually occurring tomorrow at noon by the Neighborhood Builders Owners Alliance Group, where they're actually going to be having a presentation by Daniel Hurst, who's the Director of Policy with the Chicago Department of Housing. He's going to be going over some information regarding the Emergency Rental Assistance Program. And not only that, they will actually be hearing from two attorneys who will be going over the eviction moratorium, where we all know that's scheduled to end August 31st. And that event, once again, is going to be by the NBOA, and it starts August 24th tomorrow at noon, and it's going to be via Zoom. I'll drop the information in the chat bubble as well. And once again, thank you all for tuning in to the Multifamily Market Update this Monday, and we look forward to seeing you all next week.
Thank you.